Hello traders, I'm back. I'm Dorin Roșu, aka Jimmie, and this is my analysis for the Euro versus United States dollar, in which I'll discuss my point of view regarding the graphical analysis and the opportunities for the week ahead. First, I'll take a look at the weekly chart in order to gain direction, and then on the daily chart for further information and for the actual trading opportunities. Now, on the weekly chart, the bias is bearish, and that's because this support here had been broken here, and now price is in a consolidation phase far away from this zone. Now you could argue that this consolidation zone here is also an attempt to confirm this area as a support after the break over here of these two levels, 1.17 and 1.16, which are the projections of this height over here. However, a problem with that theory is the fact that this area here made a lower low in comparison with this area here. Another argument to take in account is represented by the ascending waves. If I take a look at all this move, I can see that the first wave is roughly 1,700 pips, and the second wave is around 1,000 pips. Which means that the waves diminish by a factor of 700 pips. And if the last wave is around 1,000 minus those 300 pips, results that the last upwards wave, the last ascending wave, should be around 300 pips. And it's around there. Okay, so this is much more actually a consolidation phase. Now, another thing to take in account are the candles. The thing is that the last candle is a bearish engulfing candle, which closed under the last four candles. It also made this higher high. So after this higher high, a closure such as this invalidates any bullish attempt. Also, it's under the psychological level 1.17. And another thing to take in account comes after this hanging man pattern, which in turn comes after this ascending phase and stops around, actually both candles stop around an important resistance, and there's a resistance to confirm. Okay, so another thing to take in account. There are two candles that are reinforcing each other. And that being said, I'll switch on the daily chart. On the daily chart, the bias is also bearish, and that's because of all this downwards move, which came after a failed attempt to continue this after this bullish consolidative phase. Also, this downwards move is very steep, which helps, which means that the bears are determined, and this last phase here, the end of this downwards move, resembles a bearish symmetrical triangle. It's a continuation pattern with lower highs and higher lows, and I would expect the continuation, so downwards move. I just want to note the fact that I prefer to begin drawing the line from here, because I find the fact that drawing lines from steep tails like this is not the best idea. Yes, and now for the actual trading opportunities, of course, there are aggressive and conservative opportunities. The aggressive ones are like so. I can see price confirming, retracing a little in order to confirm this 1.1689 as resistance, or I can see the formation of a bearish pennant or a bearish flag, you know, some little candles around here, and then a big candle that closes under this you know, this pattern over here, this flag. In this case I would sell. I forgot to say another bearish argument for the bearish bias on the daily chart is the fact that we also can see here this bearish candle which closed again under this 1.1689. So resuming with the aggressive position, a sell, as I said, after price confirms this level as a resistance, or after a short consolidation, with a first target around this 1.155 level. Now, another aggressive way of trading this is if it happens, if price retraces around here, around this 1.1847 and confirms it as a resistance, or if it falsely breaks it. In this case, I would sell, and my first target would be just above this 1.1689. Now for the conservative positions, if a buying opportunity appears, conservative one, I would see it in the form of price getting above this 1.1847, confirming it as a support, or price again getting above this level and maybe consolidating around this 1.1938 and then continuing the upwards move. So a buy opportunity here or a buying opportunity here. In case of this opportunity, a first profit taking area would be just around this 1.1938, and the second opportunity, which also represents the first profit target for this scenario, is just around this 1.20 or 1.2050 before this 1.209. And the main trade, to call it like that, the main conservative selling opportunity is the one that comes after price breaches this double support, this line of the support of the symmetrical triangle and this 1.1554 level. In this case, I would sell. Also take in account that a selling opportunity may occur after price takes out these lows. So another option is to sell after price breaches and confirms as resistance this 1.1508, which is the correspondent of the psychological level 1.15. I would sell here with a first target around this 1.1366, and because I'm expecting this to evolve to be a long-term trade, I would expect a move such as this, of course with profit-taking areas at each psychological level. And yes, these are my expectations. That's all. If you like what you see, if you enjoyed the video, please like if you're on Facebook, or subscribe if you're seeing this on YouTube, and comment to let me know what you think and what you'd like to see in future videos. Trade well and take care.